Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks, and it's a long weekend. And it's Labor Day, so I want to wish everyone a happy Labor Day, especially all those folks that are actually in the labor business, because laboring is a tough job, folks. There's no two ways about that. Market-wise, let's take a look at it out here. We have the Dow Industrials right now down 18. NASDAQ up 14. S&Ps are up, they're flat. Gold contract down $2.70, traded $1,287 an ounce. Silver off 10 cents at $19.50 an ounce. Platinum, $1,423. Copper up a penny and a half at $3.16 a pound. Light sweet crude up $1.27 at $95.82 a barrel. Bonds, we have the 10-year flat at 126.11. 30 years down 7 ticks at 141.16. King dollar up 244 ticks at 82.76. The euro is down 44 at 131, and the yen is trading up 34 at 104.07. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so today's going to be the lightest day of the year. Right now on the NYSE, we are running, we're at 271. That means we'll come in about 430, something like that. We go and take a look at the NASDAQ. The NASDAQ volume right now is 927 million. That says that's going to be lucky to hit 1.3 billion. It's going to be probably 1.25 something. Bottom line, though, is that when you go over to the S&P, what you have is this. It doesn't look to me like the S&P is going to close below the benchmark on the daily, weekly, or monthly, okay? And with the benchmark, well, there's two separate benchmarks. He's going to close above both of them. The lower one, meaning that the smaller benchmark, will be 1994.76. The larger benchmark is the 1991.39 area. So what does that mean? That means, guess what? You're at a higher high. You do have lighter volume, but that means you can go higher. That's how this shakes out. So we'll see how we come into the close out here today. But what you do have, we go over to the SPY for a second. You look at the SPY. The SPY, 34 million shares out here. You're pushing into the last high, which didn't have any volume, which was 47 million. We're at 200.30, and that aspect up there, bottom line is that you're over the 199.76, and I suspect, I know that's only 35 or 40, 50 cents points down, but bottom line is that I suspect coming into this close, there's not going to be any selling coming into this close. They just flatten the whole market out. If you go over to the DAX, this is pretty incredible. So if you look at the DAX out here today, folks, what you had is this. The DAX in Germany, and I won't get the volume until later, unfortunately, but the DAX in Germany basically, well, had gone today from 95.17 down to 93.69, and it came down there. I suspect it's going to be with juice. And then the last hour, they saved the market. They brought it all the way back up, sideways market. That's what it comes down to. The FTSE in London, if we take a look at the FTSE in London, FTSE in London did the same thing. FTSE got down to a low of 67.82, ran it all the way back, top side, up to the 68.19 area. Gold contract. Oh, here, let's go to the NASDAQ first. We take a look at the NASDAQ. NASDAQ's at a high, 45.71, no juice. Bottom line, at a high, can go higher. Dow Industrials, we take a look at the Dow. What's intriguing about the Dow now, the Dow double-topped. But the way that the Dow, well, the way that the S&P and the NASDAQ is at highs, I expect what you're going to see Tuesday is that we're going to get a test of that high. That's the way this is shaking out. What we will have next week is this, is that next week you're going to have higher volatility inside the market, and realistically it won't be on Tuesday, because what happens after a Labor Day weekend, folks, is that when you come back in a Labor Day weekend, the Tuesday after Labor Day weekend, normally that day is slow also. It's Wednesday, Thursday, Friday, then you're getting into a normal trading type of market. That market stays like that right up until Thanksgiving. So it's a very long stretch that the market has a chance to either break topside in a huge way or break down in a huge way. We take a look at the gold market. What we have with gold is this. Gold is holding that price point of the 1281. We are at 1287.90. That's saying that gold wants to make the run up to that 1347 area. Silver also is holding well. Silver right now is trading out at 1950. If we take a look at this silver contract, both the gold and the silver market, folks, had a nice little expansion this morning. There was a buyer in there this morning when Darryl and I were doing the show, and it was a decent buy, by the way, too. They came in with some good juice. The silver market came in with 1,300, and then this is intriguing because coming into the close out here, they tried to break it down, and they couldn't break it down. In silver, they sold 1,200. Now, check this out. As they were selling 1,200, that was going into the downdraft that had been created yesterday, or 2 days ago, the 27th. But that downdraft has 1,700. And when I'm talking about contracts, folks, I'm talking about those contracts on a 10-minute basis, the 10-minute bar. If we go over and we take a look at that gold contract once again, and we'll look at the same thing, because I want to see if they sold that into the close also at 120. Okay, they did. So check this out. This is pretty cool. So, and the gold contract, same deal. As it going up top side, we went top side with 5,200 contracts. That was at 10:20 this morning. When it came down, though, they tried to sell into this, and they sold 2,400 contracts. The 2,400, not even close, was going into 4,300 contracts. So bottom line, you can expect higher gold prices. Bonds. Let's go take a look at the bond market. The bonds are just amazing. So bonds, yeah, sideways move out here today. The 10-year had, oh my God, look at it. Oh yeah, I was going to say, how the heck they ever do 2 million contracts on a Friday? No. Okay, so we had 277,000 contracts. Bottom line, 10-year will not back off the highs. We're at 126.11. That little baby wants 128. We take a look at the 30-year. 30-year right, U.S. 30-year is trading at 141.16. That did 73,000 contracts, and that also will not back off. That's on its way to 142. So there's big numbers out there where they want to go. King Dollar. Let's go take a look at King Dollar out here. What you have with King Dollar is this. King Dollar right now, 19,000 contracts. This is going to get intriguing if King Dollar is just not going to back down, period. Because the larger ABC is an 84, 85. We did 19,000 contracts. We're at 82.78. And the last high out there was 82.75. So bottom line, it's going to be amazing if on Tuesday morning, if this just blows away another small ABC structure on the way up. Because the larger one is. But I'm in the camp that I suspect this wants to back off a bit. But we'll see, and we'll see pretty quickly. We're going to take a look at the euro. The euro is absolutely toast. There's no two ways about it. Euro broke to a low out here today. What happened at 10 o'clock today, also 10 in the morning, is that Goldman Sachs come out, and they're looking that the euro is going to go to par, folks, par. You heard that correctly, by 2017. And not that anyone, whether it's Goldman, Morgan Stanley, me, you, can be right, but the bottom line is that that is their take on the euro right now. And what's so intriguing about that, of course, is that the way that the dollar is set up. Well, let's put it this way. If the euro, okay, so let's do this because this is intense. You're going to want to always, you're going to get, you save up for a couple of years, folks, and go to the Amalfi Coast. Go anywhere in Europe because it'd be so inexpensive. It'd be dynamite if, in fact, there's anything left in Europe by then. But no, there will be. Let's not go there. Okay, if we take a look at the euro and we bring this back, the way this is set up right now is that, yeah, I mean, it looks like it's on its way to 127. If you do break the 125, that is where the setup comes in. That no, it's the 123. You break up the 123. Guess what? It's not even par. It's 80 cents. It's 80 cents, and that would be saying that King Dollar would be worth 121. How's that? It's Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. The Dow is down 14. Nasdaq's up 15. S&P's up $1.50. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, in the world of Medtronic, folks, this is a trip. So check this out. Medtronic is going to pick up their chief executive's tax bill. And this is a special penalty that when executives do move their domiciles out of the U.S., there's a penalty that's involved in it. But bottom line is that the shareholders are going to end up paying for it. So this particular penalty for the CEO is $25 million. So they're picking up that one, but what they're also doing is that they're picking up the rest of the executives, and so they're going to pick up another $38 million. So 38, 48, 58, $63 million. So check this out. This is pretty amazing, actually. But I suspect, well, we'll find out how much they're going to save. Medtronic is taking over. I believe it's Covidien, right? So it's a 42. Yeah, they're buying Covidien, a maker of hospital supplies, and they're going to move their headquarters to Ireland. Bottom line, it's a $42 billion purchase. That's still big money, though. There's no two ways about that. And if you, that's the bottom line. Another news little bit that came across the tape out here, and this is pretty cool. If you've listened to Nico and Paige at 12 o'clock, outstanding show. And Nico, and in fact, I do it all the time now, we talk about bulletproof coffee. And what bulletproof coffee, folks, is there's a guy that started this out in the web. I don't know if he started it, but he certainly bring it out to a lot of people. And what it is that you're taking grass-fed butter, unsalted, and you're using the grass-fed butter and putting it inside your coffee, and you mix it up. You mix. I suspect the bullet is one of those mixes, and that's how it got the name. But bottom line, if you haven't tried it, it's outstanding in your coffee. And the method to the madness, okay, is the aspect that the butter itself, okay, is really great for you. And for years, okay, they've been, telling us that no, butter's no good and margarine's where it's at. Well, we find out later, of course, that margarine is like plastic in your system, and the fat in butter is good butter. And what it does specifically is that your system works off the fat versus your system craving sugar. So if you haven't tried it, try it. But what just came across, now, so check this out. The reason I'm bringing this up is that, of course, it's healthy, but the other side of that, which is really amazing, is that I never knew they traded butter futures. And butter futures, folks, have gone, they're the highest they've ever been. And what has happened, and this is pretty wild, if in fact, it has to do with, well, it definitely has to do with the type of demand that is coming into the butter market. This is the most amount of butter people have had eaten in period, just flat out, and the least amount of margarine. So it's pretty cool that people are catching on to the fact that margarine is basically plastic. That's what it is. If you're into margarine, folks, take a look at really what you're getting, because it's a problem. It's really wild. I mean, butter futures. And so what is happening is that butter futures today are right up there big time. We'll take a look at some of the other future markets. We have lean hogs. They're up 3%, but they've already come down dramatically. The gasoline market, which is going to affect all of us, which is affecting all of us, that's trading at 278 right now. The gasoline market, folks, looks to be an ABC structure on the way down to 250. What that would do would just be amazing. It would bring gas under the $3 level for the first time in a long time. Now, what is amazing also is this. So check this out. The competitiveness inside the oil and gas market is huge. What happened in New York City today, okay, this morning, is this. So check, this is amazing. So jet fuel, right, which is heating fuel, right now, if we take a look at jet fuel and we put it up, it's $2.85, okay? And jet fuel has come down from a price point of $3.08. So as the crude oil market has come down, the gasoline market has come down, and the jet fuel market. Jet fuel is heating fuel, diesel. But guess what, folks? If you're up in New York right now and New Jersey, the pipeline that gets fed the jet fuel going into JFK, going into Kennedy, going into LaGuardia, going into, what's the one in, going into Newark, the pipeline operator decided that they had to shut it down for an inspection. Check it out, right? Right before holiday weekend, which is a huge amount of flyers. So what did that do? Guess what? Ba-boom! It pumps up the price that the airlines are paying in New York, in New Jersey, right when they need the fuel. So, right, what the story was about, normally what happens is that they like to have the tanks, meaning on the airport, filled for 5 days. What's going on right now, they're only filled for 2 days. And everyone's scrambling for jet fuel in order to do it. It's amazing, okay? I didn't get. It's amazing. Number one, that there's a partnership that runs the pipelines that come into them. But you know, I suspect over the weekend maybe there'll be a couple of good stories about it. It's actually the perfect time to do it. Now I'm taking the deviant side of this. The perfect time to do it because number one, what ends up happening is that the aspect of over the weekend, you're not going to be able to get hold of any politicians. Number two, the airline's got to pay up so their corporate customers paying up, okay? So you can see how the squeeze is coming on. And in that context, listen to this. This is a trip. Now, Duke Energy, right? This story here, you're going to just... Okay, Duke Energy has taken over a lot of different large energy companies across the country. And the way that Duke Energy bills out in Florida, okay, goes like this. And there's many utilities companies across the air across the country that probably bill out the same way. But this is how it works. So depending on how many kilowatts you use per month, the first 100 kilowatts are like $11 per kilowatt. After 100 kilowatts, it goes up to $14 per kilowatt. So what Duke Energy does, or what they tried to get away with in Pinellas County and Hillsborough County, right where we live, is this. Is that they sent out notices to 252,000 clients. And inside those notices, they said they're going to change the meter reading, and they're going to allow you, you're not going to get billed for an additional 27 days. Well, no, maybe 14 days, maybe 14 to 20 days. I forgot exactly what it is. But bottom line, so what happened is this. They said it was going to be more efficient for them and all of this. But what they didn't say was that if, in fact, that in that billing period, that if you went over the 100 kilowatts, well, guess what? You were going to get charged more money. Well, of course, they knew right off the bat. Can you imagine an accountant? And they're saying, hey, let's see if we can get away with this. We're going to send it out. And the bottom line, they were going to get away with it. And if they bottom line is that, you know, there's plenty of people that went in an uproar because, you know, your electric bills in Florida in the summer. Oh, this is the kicker, too. They did it in August, which is the highest electric bill in it. The bottom line is that they just pulled back on it this morning. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow down 5, Nasdaq's up 15, S&Ps are up 2.5. We go over to the XAU, the HUI. We take a look how these are setting up. The XAU, folks, and the HUI have some juice in it right now, so it's a nice setup coming into next week. XAU is trading up 123. The swing points that I suspect we're going to be going after, you have the 104.61. That was established in August 12th. The largest swing point was a spike high at 106. This very well could be a really sweet ABC structure on the way up. And if, in fact, that's what we have, it's a decent one, meaning it's about $18, $19, which would get the XAU right over the swing high that was established in March of 2014. HUI, the Gold Bugs Index, same type of setup. What you have with the Gold Bugs. In fact, the Gold Bugs, this is a nice way to come into a weekend. Gold Bugs Index is up $3. We're at 245. Your swing point on that is 251. And what I love is that we're not going into that swing point on a slow volume week. The A point on the HUI is 201. Your B is 242. So you get a $40 A to B, which gives you a 271, 272. That would also take the HUI over the highs that were generated in March. And you get that happening. I'll bring this back if you're watching a little bit more now, on Tiger TV, rather. You get that happening, then, yeah, then you got big action. Oh, look where it's going. I see. Interesting. Okay, so you get that happening, and you got... We've been in a consolidation. Actually, let me put this on. I'm going to put this on a monthly for a bit. First, I'll put it on a 5-year weekly. So we've been in a consolidation. You know, you got to remember something. The gold topped out in 2011, went straight down for 2.5 years. You know, first bottom got hit in December of 2013. You can make the case, however, that the consolidation started in June of 2013. So that's a year. What it has done after it tested the lows, you know, since May of this year. Well, no, the first test was December of 2013. As it tested that low, had lighter volume, you had the first expansion up. And that's what gold loves to do. It loves to do like a good 3 expansions on the way up before it breaks topside again. Right now, this would only be, yeah, this would be the second expansion. The first expansion was a beauty. It went from... HUI went from 189 up to a price point of 261. This one here started out at 203. I suspect you're going to get up to the 300 area. Then what will end up happening, which is amazing, is that everyone will get real bullish in gold again. Then guess what? It's going to go back off one more time. Then the next time up there, more than likely, you'll blow through that. The reason I'm saying it's not that anything in the market is always the same, meaning 1, 2, 3. It has to do with the amount of the supply line. The supply line on gold and gold shares is dramatic. Why? Because of the way that we came down off those highs. You can make the case that the supply line on gold goes all the way back to 2005. Yeah, 2005 all the way over to 2013. Because there's plenty of folks that are stuck in those areas, you know. But it's tested the 2008 lows, did it with lighter volume, and now what you do want to see on a monthly basis is a couple signs of strength, you know. So we'll see how that whole thing does shake out. What I do expect, though, is that as the dollar, and this is where the divergence comes in, the dollar also wants higher price. So it's like, okay, how is the dollar going to go up and gold going up simultaneously? The way that can happen is that each and every time the dollar goes up, gold backs down, goes sideways, whatever that does. As the dollar backs down for the next ABC structure on the way up, gold starts moving up a little bit more. And so what you'll see, percentage-wise, I do expect that what you very well might have is that the dollar would move higher percentage-wise than gold would move. Fundamentally, I can absolutely see, well, technically the setup is there. Fundamentally, I can see how that could happen. Why? Because of the political situations all over the world. It's not, and it's, you know, when people were first getting into gold, I think it definitely had to do with the aspect of our dollar going down. That aspect, folks, if people, you know, you're going to hear it we seem to continually hear that the dollar is trash. The dollar is not trash, folks. The dollar already hit the low. We went from 121 to 70. Bottom line, more than likely, we're back to 121 in another 10 years. What the differential is that where are people going to have a store of value? And the store of value always in history has been gold. The store of value in a low interest environment, which we're in an extraordinary way, guess what? They can't make the argument that gold doesn't pay interest. Well, guess what? Cash doesn't pay any interest, okay? You haven't heard that anymore. And you know what's amazing? So check this out. This is what's really cool. So check this out. Do you remember how many times large institutions would say on a continual basis, why would you buy gold? It doesn't pay any interest. Do you ever hear them now saying, oh, don't give me your cash because it doesn't pay any interest? The banks want all the cash they can get off you. Because guess what? They can make money on it. They can just send it into the Fed and still make 0.5%. Bottom line, you can see the hypocrisy in the deal. to get back to the world situation as to where gold and silver, and gold and silver also, gold, silver, the dollar, I suspect what we're going to have there is that the world slowly, whether it's in Europe, whether it's in the Middle East, whether it's in Russia, okay, they're going to basically start putting more money in dollars, and they're going to start putting more money in gold. You know, depending on where you are in the age bracket, you know, if you go back 25, 30 years, no matter where you went, now it has been happening. And when I say stash, it doesn't matter what country. Just name a country, and guess what? They're gonna. There's folks that are stashing huge amounts of dollars on a continual basis. Why? Because what you have is that the dollar is a universal payment system, and the way that when you're crossing borders, or you try to, you know, if you cross borders with a peso, you get nothing. You know, it's the bottom line. You get the gist of it. So we'll find out if, in fact, that's how this whole thing's going to shake out, and if that's what the catalyst is behind, you know, gold going higher, silver going higher, metals going higher in particular. Commodities in general, you know, right now are weak. There is no two ways about that. Well, not all of them. You know, I was just talking about butter. Butter is at highs. You know, so and bacon is at lows. But here's another story. Bacon lovers can rejoice. The tourist tempting website. Let's see. Is this it? The bottom line is that what has happened is that hogs had already got to the high out here. They're up today. They're at 98 cents today. But the hog market basically already imploded. We just went from $1.20 down to 98. Yeah, you're dealing with $1.18 on July 7th, and you know we're August 29th, and this is going to be another ABC structure on the way down. That's what it looks like. Cattle hasn't done. Let's see what cattle's doing today. So coming in, cattle, where is she? Live cattle, we're at 151. 151, that's up a penny and a third today. We just came down from 160. You know what's amazing is that there's no doubt this cattle market went to the moon. It's hard to tell whether that baby is topped out yet. We go take a look at the some of the Dow stocks out here. If we go, United Technologies is just screaming that it already hit the February 5th low, hit it with volume, that benchmark. On a day that we have no volume, guess what? United Technologies has 3 million shares. That's after basically going up with 1.7 million. United Technologies is a great equity. There's others out there to see what ends up happening as to where the volume's going. And this here, folks, is a very large ABC structure on the way down. Your A point is $1.20. Your B point is 103. So you start talking about 17 points. Your C point is 110, which gives you a 93 A to B equals C to D structure. You take this and we put this on a monthly basis, and you line up 93, and it's going to get intriguing. Why? Because 91 is where is the July 03 swing point that got taken out with lighter volume in March of 2013. And all the United Technologies made a high on a monthly basis with 59 million, then comes off the high with 103 million, and you're going to do 75 million. So what you are going to get at the end of today is you're doing, well, you should take a couple of days off, but if you're doing some work on Monday night as we're coming back on Tuesday morning, line up those monthly charts and see where those volumes are. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We have the Dow Industrials right now up 8, Nasdaq's up 17, S&Ps are up 3.5. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, each and every trading day at TFNN, we broadcast 10 hours of live content. We start at 8 o'clock in the morning, go from 8 to 6 in the evening. We take that content, replay it. You can get all of that content right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com on the right-hand side. You'll see the TV running. Just hit that TV. You get the video and the audio. Now, let's go take a look at TROV. This is from one of our Tigers. This is a applied genomics company. The low is 297. The high is 913. And you want some volatility? Well, this is it, baby. Okay, so check this out. Okay, and this is where it's important to understand price projections, ABC structures on the way up or the way down. So this is an equity. Well, first off, let me bring it all the way back first so you can see the longer aspect, because this is an equity you want to wrap your head around here, folks, okay? And what it is, in fact, I remember, I believe one of the Tigers, they called about this last week. So what you have first off is a high volume high. This is an equity that got crushed. And when we say crushed, it went from, you have a high volume high at $10.26 that had started at 45 cents. So in July of 2011, it's 45 cents. It goes all the way up to $10.20. It had traded as high in 2005 at $28. What you want to understand, this is a real personality stock, even going back to 2005. What a personality stock specifically is, it can go to the moon and crash simultaneously. So if you're in it, great. You got to always make sure you're always selling. Okay, so, and that aspect, you get a high volume high. That's where it wants to go to, right? It pulls back last month, does it with lighter volume, does exactly what it should do. It was pulling back into July of 2012. That at one point, that low there was $2.11. It had 1.9 million. You were pulled into that low with 1 million. You went to 298. Then you come off, okay? So the bigger issue right now is that you've come off that low this with volume. That's saying longer term, yes, it wants to go to $10.29. Okay, so that's the nice setup there. Okay, now let's watch what it did right here this week. Pretty amazing. The stock in the last 10 trading days went from $3.25 up to $7.10. Your structure, when you take a look at this ABC structure, though, which is important, your A point on this is 292. Your B point is 487. So let's say it's $2. We'll ballpark it at $2. Your C is 393, which gives you basically a $6 A to B equals C to D, right? Bottom line, it overshoots this. Well, actually, it says a 1.150. This is interesting. Thank God it didn't do a 1.618, or it would take forever to come back. So you took your B point out. Your B point up here, you got to take the day before, had 1.1 million. First day you get over it, you only had 300,000. The second day you had 800,000. So you took the B point out. You had lighter volume. You still did the price projection, though. Then what ends up happening is that it does a 1 to 1.50 ABC structure on the way up. You got to remember something. A 1 to 1.618 is a total reversal. If you're trading something like this, folks, you want to start taking money off. It didn't give folks much time to take anything off out here this morning. You went from $7.10 down to $5.84. The way it's going to be set up right now, particularly because what you do have, I believe this is a biotech, right? Yeah, you get a biotech. Let's see if they take in $57 and they don't make any money. Okay, so they take in $57, they don't make any money. So now what do you have? Well, you know you have a personality stock. Wide price spread, accelerated volume. You give it up on price, you finish an ABC structure on the way up. You're at 585. This will go to 478. More than likely, you'll see it back down to 339, 393. As that backs down, though, depending on, you know, where you are in the marketplace, that is something that you're going to want to wrap your head around. Two separate reasons. You get a high volume high out here today. You get a high volume high at that $10 area. But you don't want to chase these babies. And this is a nice setup. You know, if we take a look, well, it's not a nice setup yet. It's performed already. It's done exactly what it should have done. And when it did go higher, even in the weeklies, you can see that the channel line from its downtrend that had started in August from 10.26 broke with wide price spread with accelerated volume with all of the above. You know, but just be careful when this is backing down, because the way this is actually structured, you know, our channel master, Mr. Bud Rolfs, he would tell you that what this absolutely can do is come all the way back to the top of the diagonal channel. And depending on when that would come back into that level, that is a very far way down, folks. So as we come into the closeout here, let's go take a look at the volume. This is about as anemic as you get. We're at 349 million right now on the NYSE. We'll take a look at the NASDAQ, and the NASDAQ right now is trading out at 1.1 billion. And so what that sets up, I suspect even in 3 minutes, the NASDAQ is probably going to get a couple $100 million on the close. The NYSE, it looks to me like the NYSE will have, yeah, we'll be in at 450. That'll throw in 100 million too. But what you do have all around here, folks, is that the cash S&Ps at the highs. That means you can go higher. You don't have a failure. You certainly have a failure in volume, but we've had those for quite a while. Bottom line is that I suspect what you're going to get is some kind of a spike. The thing that is pretty amazing, just look at all this green out here. Now, they're small green numbers, but the green is just about everywhere. It's just like the candy is out here in an extraordinary way, except for United Technologies. That's pretty wild. If we take a look at some of those Dow stocks, you get Exxon's flat. Marbell is up 20 cents. American Express is up 50. You got even 3M just came back. 3M's a dog. I'm short 3M right now, but it's a dog, folks. 3M is the large ABC structure on the way down. The oil, let's go over to ExxonMobil for a second and see what Exxon's doing. XOM. So Exxon, this one's going to get interesting. So Exxon looks like it's an ABC structure on the way down, too. You know, it looks, you know, we're going to be going into this fall, and for all you folks that use heating oil, I think you're absolutely going to have a field day this winter. And what that's going to do is put extra money in folks' pockets, and that's one beautiful thing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Look forward to speaking it right back here Tuesday morning. Be safe, folks, and happy Labor Day. Go get them, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by James Garner. Believe in yourself and everything you can be. Oh, yeah. Market-wise, let's take a look at it out here. We had the Dow finish up 54, NASDAQ up 34, S&P's up 5. We start with the Dow Industrials. What do we have inside the Dow? This is what you have, folks. High of the Dow Industrials out here that had been tested 3 separate times the last 2 weeks is 17,151. You got to a lower low today, did the same amount of volume. It's pretty wild. The Dow the last 3 days have done 601, 602, 603 million shares. Bottom line, you did reject lower price, have light volume. That says that, guess what, you can bounce a little bit further. I don't expect we're going to take out these highs, but you certainly can challenge them one more time. It's only about 90 bucks away. NASDAQ Composite. Inside the composite, what you have is this. Now, the composite came down yesterday with juice, with volume, 1.9 billion. You go up today with 1.7. You're at 45.86. That high is going to get tested. That's 46.10. It's right next to it, so why not? The SPY, with the correlations inside the S&P, we're at 200.07. Anything over that 199.06 says that, guess what? You can test that high. That high structure out there is the 201.57. NDX 100, we take a look at the 3 Qs, and that's going to be all about Apple and the IBB. That goes up 30 million shares today, 82 cents. Yesterday, you come down 36 million. That's what. That's saying that that high is going to get tested also, which was the high of yesterday, which is 100.46. Right now, we're at 100.07. Yep, those highs want to get tested. Gold contract. What do we have with gold? Gold needs some action topside here, folks. Fast, too. Hasn't been able to hold price. We do have lighter volume, and you're right at these lows. You know, what I don't want to see, I can tell you this, is coming into Friday. We're already at Wednesday. Coming into Friday, hanging at these lows. The reason being is that the low that would be the break, we got down to 1244.50 today. The low that would be the break is 1243.10, 1241.70. It's right there. You know, so it's a pretty dangerous right where gold is hanging right now. Now, you want to remember, we'll do the GLD first. For all you folks that don't look at the futures market, the GLD will be easy for you to track as your benchmark. And what it is, it's 100.77. We're at 120.77. Right now, we're at 120.26. Now, it's coming into that area with dramatically lighter volume, but bottom line is that that 77 cents has to hold. And right now, we're at 26 cents. So you can see what you have happening there. The actual, let's go back to the gold contract for a second. So inside the gold contract is what you have. You're at 1249. 11, so we're only off $75, folks, as to what it takes to get gold out of the ground. That's what it costs. That's the average of what it costs, you know. And so that number, I'm pretty comfortable with that number, meaning 1249, is it really going to spike to the 1170, 1150, 1125 and put all these gold companies in the aspect that they will stop digging for gold because every time they dig for gold, it would lose money? Well, we'll see. Bonds. Now, this is where it's going to get really interesting. So the bond market has been moving with strength on the way up. What we have done the last 5 days is that you've moved south, you know, with some volume. What we still have, however, is this. You have two separate highs that have volume. We have the high of 126.12 from August 15th. On the 10-year, that's 126.12. It's like, okay, you're going back up there. Then what we also have is the counter trend just from 4 days ago when we got up to the price point of 125.21. The real key is going to be how do you reject lower price? And I suspect we're going to see that in the next few days. The market, however, can get down, you know, a lot lower. We're at 124.14, 123.12 is where it can go on the 10-year. When we take a look at the 30-year, what you have is on the 30-year USZ FOA. 30-year right now, volume is contracting dramatically on the 30-year. You know, we went up with 495,000. You're going down with 293. But the 30-year also can get down to 136.08 to 134. So it has quite a wide way that it actually can get down. King Dollar out here, bottom line, I suspect King Dollar is going to be taking a rest. King Dollar's had an extraordinary run. Had some big juice in it today. You know, hadn't tested the high yet, but King Dollar is basically ready for a rest right here. So we reached a high out here today of 84.58 with juice behind that move, by the way. After hours out here, Restoration Hardware, this equity closed at $82.05. That is trading right now at $79, down $3. If we take a look at how this is set up, oh, this is a classic. Going right into the... now, this is a classic in the context, folks, that when you have a gap and you're coming out with earnings, bottom line is that, you know, get away from the equity. You know, it closed at $82, but right underneath there is a gap of $68. $72. Well, guess what? That's $10 down. After hours right now, it is only $2 down, but guess what? It's going to go fill that gap. Here goes the numbers. Okay, so their revenue is up 14%. $433 million net revenue. They operated 68 retail stores. The estimate, their second quarter estimate is going to be 67 cents, and the estimate was 64. But there's something in there that the market's not liking right now. So it looks to me like they actually made their numbers, but the bottom line is that they're selling that off. FIVE. This just come out with numbers. This is a, let's see, Five Below. They operate a special value retail, the company products, crafts, candy, sports, media. They closed at $42.35. This is trading now to $39.75, so you're down $2.75. Their sales were $152 million. Net sales were up 32%. Bottom line is that this little baby also is selling down. Now, this one's a classic here. You had a high. If we bring this back, you put this on a weekly basis. This had made its high in 2013, $55. It was coming into a downdraft that had 11 million shares, and guess what, folks? What we did, you did 2.7 million shares last week, going into 11 million shares, giving it up on spades. This baby is going to basically get all the way back down to this 34 level. That's on the weekly basis. You take this on a monthly basis, and what should hold her up is that her IPO come out, which is at that $30 level. Let's go over to Apple and take a look at Apple. Apple was the big number out there yesterday, gave it up on price. Today, you come up $3, 99 million shares, and the benchmark. This is the benchmark, the weekly benchmark, and this is going to be it's all that's going to matter is whether Apple's going to be able to go higher. It's 100.72, and right now we're at 101, so it's over the benchmark. This is the weekly benchmark. It had failed last week. It got over the high, closed underneath it, had lighter volume. What you're going to have this week now, you're going to have good volume. I don't think we're going to get the volume that you actually need, though. We'll find out. Right now, we're at 336 million. What you would need is you could certainly get it if it got as much volume as today, because it needs over 500 million shares on the weekly basis, and thus far we got 336. So we need, excuse me, folks, another 160 million shares. That could do it. It did 99 million shares today, and yesterday we did 189 million. So this is going to be a real toss-up coming into Apple coming this Friday. The XLE, that's got toasted and roasted. That's an ABC structure on the way down. Broke a B point. Has the juice behind it. This break of B point. This is going to be a close call. It's going to be a close call because it needed a little more volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow Industrials up 54. NASDAQ up 34. S&P's up 5.5. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials up 54, Nasdaq up 34, S&Ps were up 5.5. If we do take a look inside the NDX 100 to see what was moving it out here, you had Garmin Communications. Garmin. That's the GPS deal. That was up 206. Let's just see what this looks like. That's a dead cat bounce, man. This stock has been dead. So that's interesting. Why? Because when you're looking at the strength versus the weakness in any of the indices, you want to understand, is it a dead cat or had they been higher? Green Mountain was up by 392. That's a big number, no doubt. That's up almost 3%. Apple was one of the movers, up 304. And then you had Alexa Pharmaceutical. Alexa Pharmaceutical was up 428. What does happen inside that biotech industry out there, if we do look at GILD, which is a large mover inside the large weighting structure inside the NASDAQ 100, that was up 233, and that looks like it is going to go test its high one more time. We're at 108.22. The 110.64 is game. Taking juice away from the NDX 100 today, you had eBay was down $1.63. Tractor Supply was off 191. Wynn Resorts. Let's go look at the gambling business, because it's like, okay, what's going on when you get Wynn Resorts has just gone from $240 down to $182. We take this, we put this on, first off, weekly basis, and what we have is that we have Wynn trading back right now December of last year. oh, this is going to be big trouble. So whatever's going on inside the gambling business, it's not good because it's a large ABC structure on the way down. Let me put this on a monthly for a second. Okay, so we get this on a 10-year. Now you get volume off the highs. This is going to be amazing watching this shake out. Okay, so the way that WIN is set up right now is that you can come all the way back to 129. That'll be insane. But what that also will be is that that would show that the false break topside that was generated September of 2013, as many stocks have done, this is one that is making its way back inside. And if, in fact, that's what happens, folks, that's going to be a huge heads-up right across all the markets. Why? Because we had the expansion all the way up, and that expansion, of course, was nonstop from July of 2012 going all the way up to March of 2014. It was a one-way ticket. Bottom line is that when went sideways for 5 months, now it looks like it's a one-way ticket on the way down. The real key is going to be LVS. Let's go see. I want to see if these are all doing the same thing. Because, so Las Vegas Sands is at 62. This looks the same also. So it's really going to be one of these fundamental questions. Is the, what is actually wrong inside the world of gambling? So this never made another high. Las Vegas Sands had gone from 139 in 07 down to $2. Did a nice counter trend bounce. Las Vegas Sands is at 62. It looks like it go to 52. Not the end of the world. The real key is going to be, is it legal gambling, internet gambling that's going to basically can them a little? Or is it that, yeah, they have the buildup up there. But what is also happening is that the structure in Vegas, the last couple of big stories I actually read, is that they're making huge amounts of money now, no doubt, on the aspect of clubbing. You know, you go to the club, you buy the bottles, you know, there's a lot of different ways that they're making money in Vegas. I suspect that that's great, but guess what? There's nothing like the gambling business. The gambling business, folks, the spreads on the gambling business are a lot bigger. We go take a look at Walmart. We stay with that retail industry for a few minutes after Restoration Hardware. Walmart, flat market out here today, $76. And Walmart still wants to go test this to $73.51 again. Big Blue, IBM. We'll go back to McDonald's, too, because McDonald's had a comeback out here today. Big Blue can't get out of its way. Up 155 today. That's still having a problem. Now, McDonald's, MCD. So let's check this out. What put the juice under McDonald's today? So McDonald's hit a 52-week low today, $90.53. Rejected that low, but guess what? Had monster volume. So when you take a look at McDonald's, what you're going to see a lower low, higher volume. You're going to see a break of the swing point from February 7th. This is interesting, too, because that was the benchmark that the S&P wants to get to. That's the benchmark that Exxon is moving into. McDonald's has just done it. McDonald's just went from $103 to $90, broke the benchmark, and this is a weekly benchmark, and thus far we've done 26 million shares, and the benchmark's 30. So what you're going to have is that means McDonald's has done two different things. It broke the benchmark, did it with volume. That sets up a price of the next leg down of $83. This is going to be really intriguing watching how this shakes out. So this is why. So on a daily today, you rejected lower price, but you did it on heavier volume. That's going to do, you'll have a counter trend bounce. Thing can bounce up to 94.82. And 94.82, what happens at 94.82, folks, is that that's just the low of the downdraft that was created the week of the 25th. Sorry, June 25th. That's how that sets up. I suspect you go into that and have lighter volume, and all that has done is set up a large A to B structure that wants to get into lower price. So that one's going to be a monster one to keep an eye on. Let's go over to Boeing, BA. We take a look at Boeing. Boeing's at 128. This is another equity I believe has already hit its benchmark of the, let's see, no, it hasn't. Okay, so Boeing Yeah, it did. Actually, it did. So the benchmark on Boeing, the February 5th benchmark on Boeing was 118.77, and we came down last week to 117.87. You know, that benchmark is game here. And that benchmark, just so to refresh your memory, and this is what gets really bizarre inside the S&P, folks, because the benchmark inside that S&P is 1798 to 1737, and we're at 1995. And yes, it's like nothing can bring the market down. But the bottom line is that individual stocks have hit it already, and guess what? we'll come down there. There's no doubt, though, I have a weekly cash S&P, and this thing has gone nonstop, up almost 50% from November of 2012, and it's been a straight line move. That's on a weekly. If I put this on a monthly basis, it's even more intense. There's no doubt. A monthly basis, it looks like it from 1,074 in October of 2011. It looks like there wasn't even a retracement. There was one retracement in 2012 from May to, in May. And other than that, a small one in November of 2012, but other than that, it's been one straight line move all the way up. Pretty amazing. And it's not parabolic, by the way. I'm bearish. I'm still bearish. I suspect we're getting back, but that is not parabolic. It's less than it's about a 45-degree angle. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Some of the high-volume stocks in a low-volume market. You had eBay down 163. Apple was up 304. We had Pfizer up 21. Comcast was up 30. ExxonMobil was down 58. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email TigerFund at TFNN.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We go over to the UK. We take a look at the FTSE 100. This is what you have happening in the FTSE. She's a flat market out here today. We're at 68.30. The FTSE, folks, has been struggling for over 13 months to try to get over the high. Bottom line, hasn't been able to make it. You're talking about, actually, it's a year and a half. Yeah, 13 months. Each and every time it gets up there, it just can't make it. The high we're talking about is 68.75, and right now you're 45 points away from it once again. So we'll see how it wants to go, basically try to get up to that level again. I do expect we're going to try to make it. Bottom line, we'll see whether we can take it over. DAX in Germany, what you have with the DAX in Germany, today, that was a flat market, down $10 actually. And the way the DAX has been trading is that looks to me like, you know, your highs that were generated with the 10,000 mark, we were up at those highs for approximately 2.5 months, came off the highs with huge volume on the way down, and had been struggling to basically hold price. We are at 9,700 right now, and the actual ICE is 9,704. You know, so I suspect, number one, yeah, you can get up four more points, but it doesn't look to me like the DAX can handle that higher price. We go over to Asia. We take a look at Hang Seng. Now, what's going to be really cool is our man, Mr. John Logan, of course, who kicks us off every day at 8 a.m. He is going to be doing the show from Asia. He's in Hong Kong right now. He'd be doing an update, but he's getting settled over there. What we have had with the Hang Seng is this. Hang Seng had a monster sign of strength on September 3rd. You know, you went from 24,700 to 25,300. Big number up. And then what you did is you tested that high with lighter volume. Now, inside that whole context, what you have happening is this. And this is where you always want to make sure you go from a daily to a weekly to a much longer-term chart so you can say, okay, what is the Hang Seng doing? Well, the Hang Seng, folks, has been trying to test the 24,998, 988 that's been hanging out there since November of 2010. And every time it gets up there, can't handle it. And we're talking about that it was $41 billion at the first high. We did $28 billion last month. It's not going to be able to handle it once again. And that's all about a supply line that's still left over from 2007 for the Hang Seng. So when you start, let's go to the Nikkei in Japan. And the Nikkei in Japan right now was up 39 bucks last night. We're at 15,788. We put this on a longer-term basis, and this Nikkei, it's like when you get a retracement, you want to be buying it, folks. That's the bottom line. Put this back further. This is strong. And what this is about, and this is what you're going to have to worry about inside the Nikkei. So you have the Nikkei, you know, it's gone from 7,100 to 14,000. 15,000. It looks like it wants to go a lot higher after a retracement. The correlation inside the yen, one of the main reasons that the Nikkei is going so much higher is the yen is getting so much weaker. Now, the yen has just gone from 101 to 106. The yen itself, we put this on a much longer basis, what you're going to end up seeing is that the yen came off the bottom December of 2011. It's getting ready to finish its first leg up, and its first leg up can get the yen to about 123. Build some cause, and then hold on, because then you're going to see this yen trying to get to 183, 262. What that's all about is the Japanese economy itself has been basically crashing, contracting in a dramatic way to the point of 7%. That's a huge contraction, folks. So what you have had, and we've had this for years, is that there's been deflation going on. They didn't move quick enough to basically break down the yen, because the yen turned so strong, it was amazing. And what that did is put a huge amount of manufacturing out of business. Now what you have is just the opposite. Now what you have is that they're pushing money into the economy, but no one's using it. And no one's using it to the point, if you want to hear just how bizarre this is, to the point that on the 2-year over there, you have negative interest rates. So what has happened is that banks, folks, anyone that wants to put money inside the bank, period, is turning around and have to pay the bank in order to take your money. Yeah, you've heard that correct. Pay the bank in order to take your money. That has happened in 3 separate countries, folks, in the last 4 to 5 weeks. What does that have to do with our markets? What it has to do with it, folks, is that this is a worldwide phenomena, meaning with this rate structure. Right now, what we do have is that our own 10-year, 30-year, they're backing down. They're backing down with some juice, too. So I expect that, yeah, they're going to pull back a little bit more. But that's on a shorter-term basis. On a longer-term basis, meaning what's longer-term, 3, 4, 5 weeks, these bonds still want to go higher. So it's going to be wild watching this whole thing shake out, because I don't actually ever remember in my lifetime that you ever put money in a bank, and the bank, you have to pay the bank to take your money. That's how bizarre it is. But bottom line, that is happening, and it looks like in Japan it's going to continue to happen. The reason being is that their central bank, just like our central bank, is buying bonds. Their central bank is buying the bonds that are at a negative yield. So that's even more bizarre. So check it out. What that means, yeah, you heard that right, that it's negative. Their 2 years are negative. So the central bank itself, who's printing it, ends up buying it at a negative yield, costing them money. Why? Because they're trying to push more money into the economy. But it's the same problem on a worldwide basis. No one's using the money. You can push as much money as you want into an economy, folks. But if the velocity of cash doesn't go from me to you to someone else, and that circle keep getting pushed, versus all of us just being tight with the money, guess what? Inflation's not going to move. Inside the oil market out here today, you know, we'll see whether things will lighten up, meaning cash will start moving because of the amount of money that I suspect we're going to save this winter on oil. Crude oil today was down 1%. That wasn't a big number, but heating oil, folks, big number. It was still down 1%, but heating oil broke out a bottom. You're at 276. That wants to go a lot lower. And gasoline is the story. Gasoline, folks, okay, is just going to be amazing. You're going to be able to fill up your car at under $3. What the gasoline market did out here today, she was down another penny, but she broke out the bottom of a consolidation she's been in, broke it out with volume, you know. So the last low out here had 45,000 contracts. We did 43,775. We're going to need a little bit more, but not a huge amount. That little baby right there is saying, hey, guess what? That wants to go south. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. That programming starts at 8 o'clock in the morning. I'm Mr. John Logan, kicks us off, goes all the way to 6 o'clock at night. You can get all that programming on your cell phone at TFNN.mobi. If you'd like to get Tiger TV, you just go to TFNN.com. You'll see on the right-hand side the TV going. Hit that TV. You can get Tiger TV, which is the audio plus the video. I'm sure you may have heard the promotion many times for the Tiger Real Estate First Mortgage Program. If you have money in the CD market or you have extra cash that you want to get paid on a monthly basis and you don't need that money for 4 years, we'll put together a program. It's a first mortgage program for the properties that we have. You'd be lending at 70% of the assessed value. These are all totally done over, leased out. If you want to learn more about that, you can come over to our website at TFNN, and under breaking news, you'll see the first mortgage program, secured investment. There's a 6-minute video there to show you exactly how that works with a couple of the properties. We have a lot more properties I can show you, but with the actual properties and the actual documents that you receive. The actual documents that you do receive, there's no expenses on the investment side, meaning the investor. The actual documents you receive, you get the HUD statement, you get the mortgage, you get the note, you get the title insurance. And what the title insurance is all about, folks, we have title insurance on all these properties now anyway, but the title insurance you're receiving ensures that you have the first mortgage on the property. You can check that out right on the front page of TFNN.com. VNet, let's see what's happening with VNET. So what is going on with this stock? So VNet is, they provide internet data services. The company hosts consumer networking products. This looks like, what just happened here? This crashed from, went from $20 to $14 intraday and then finished at $20 again with monster volume. You stay right there, folks. This is Tom O'Brien. This is TFNN. Looks like they got some fraud allegations happening. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. If we go over to the gold market for a second, you have Anglo Ashanti. So Anglo Ashanti, folks, one of the largest owners of Anglo Ashanti is John Paulson. And this is going to be interesting to see how this baby shakes out. You know, Paulson has been in this market for a long time. He owns 26 million shares, 6.59% of Anglo Ashanti. Now, technically, what you have here, this is an absolute mess, okay? I mean in a huge way. Gap down today, monster volume, down $2, 12 million shares. So watch what you have here. Now, this is, you know, the setup on this baby was that it wants to test the low swing point anyway, which is 1162. So this thing's not done on the way down yet. And that, the last time we came down here, this is a heads up as to how, when you test a lower swing point, if it tests with too much volume, you'll be back down there again. The low swing point in 2008 was 1392. you had 70 million shares. You go all the way up to $52. So you went from $13 to $52. You come back down again, which is this, to $13, $11, but with 95 million shares. So the test was 95 million shares versus 70 million. It's like, how the heck did that happen? You got to a lower low, had higher volume. Guess what? You're going to be down there again, right? Okay. Takes a bounce, does the bounce from $11, gets up to 19. Okay, now it's making the run down there once again. So watch what this is all about. Well, this is Paulson's story, but I suspect the way that the market is reacting to it, okay, the bottom line is that, yeah, the company itself is basically giving up on investor value in a huge way. So what they do is that they're planning on spinning off their South African assets. AngloGold announced a $2.1 billion share sale as the world's third biggest gold miner bowed to pressure from investors, including billionaire John Paulson, to spin off operations outside of South Africa. Bottom line is that what AngloGold fell the most on record in Johannesburg after the company said it hired UBS and Goldman Sachs for the share sale to repay debt. Bottom line is that what you have inside here is that Paulson's saying that, you know, they're not doing it the right way. What you have, folks, is that this is going to be big trouble because the way this is coming into the low, number one, it's coming into the low with volume, and it's like, okay, is it going to be able to hold the lows? You know, we'll see. The way this is set up right now is it better not hit. So on a monthly basis right now, yeah, on a monthly or a weekly, if you own one of these, and Paulson himself, he does not want this to hit this low right now, because if it hit the low right now, it'll blow it away in a big way. And this company, just so you understand the history of this company, the history of this company is that this was one of the largest bankruptcies ever inside the gold business, going back about 15 years ago. Right at the low of the market, folks, it used to be just called Ashanti. And then they combined it with Anglo. Ashanti had the oldest gold mines in South Africa. Most of them are down 12, 14 miles. And it was a problem when gold was $275. Well, evidently it's still a problem when gold is $1,250. So it's a legacy issue on a continual basis. And what has happened, if we go over to Gold Fields for a second, if you want to see just the opposite, Gold Fields had pushed their South African mines out. The difference being is that when they pushed theirs out, guess what? They did it the correct way. When they pushed it out, the assets they actually pushed out are worth good money. Goldcorp came off the low of a 292. You're at 429 right now. And it looks like that wants to build cause to get into higher price. So it really has to do with, you know, how you basically push assets out. So we're going to see this whole deal play out. Inside South Africa, when we talk about the correlation with the dollar and its rand, well, the rand dollar is still at 10.92. The amazing part is that these South African companies should be making a fortune because of the rand-dollar correlation. And, you know, we'll see if, in fact, they can do it. But when you have a rand dollar that's so inexpensive, what happens is this, is that your expenses are in rand dollars, and you're getting paid for the gold in U.S. dollars. So inside the correlation, like, let's say, just look at Harmony. Harmony has 32,000 employees. Well, guess what? Every time that the rand gets weaker and our dollar gets stronger, their expenses go down dramatically. So thus far, you know, and we've been waiting for that for a while, they haven't been able to get juice to the top side, even with that correlation going on. So I suspect what that is all about is that the gold, the amount of ore that is coming out is less. So even though the currency is working in the way that the expenses should go down, evidently the amount of ore, meaning the quality of the ore that's coming out, evidently is not as good as it should be. You stay right there, folks. So we got Allie Ford coming up next. She's going to keep you healthy with her program from 5 to 6. And, of course, don't forget, tomorrow morning, 8 a.m. Eastern Standard Time, our man, Mr. John Logan's going to be out here growling and prowling with you. What we're looking for overnight is this, folks, okay? If we take a look at the future markets here, well, actually, you know, President Obama is going to be speaking at 9 o'clock. That's going to be, of course, about ISIS. That's going to be about Syria. That's going to be, who knows. Bottom line is that this is about the never-ending battle that I suspect is going to continue for quite a while. Will it affect markets? It hasn't affected markets yet. That's the bottom line. S&P out here, cash S&P, you're at the price point of 1995, and you know these highs up here. We've been up these highs for a long time. I don't see something that's going to be busting these highs out. Just don't see it. And it's going to be all about the NASDAQ Composite and the NDX 100. And of course, what that's about, that's all about Apple. Bottom line, coming into this Friday, Apple, the benchmark on Apple. And that's going to be the number. Can Apple hold price, and will it have volume? This is going to be the third time it's testing the high that was generated from September of 2012. That benchmark, folks, is 100.72. And Apple's going to need more than 500 million shares. It looks like she might be able to get the shares. It's going to be a close call. We'll see if she gets the price. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. You stay right here. Allie Ford's coming right up next. Go get him, folks.